This is general information and not advice. Please speak to a licensed finance professional about your circumstances. Stanford Financial is authorised under Australian Credit Licence Number 541480. Further information is available at stanfordfinancial.au.
Hello and welcome to Ipswich's Real Estate Podcast, a podcast where we help you navigate the often complex world of buying, selling and renting properties in Ipswich and the surrounding areas. I'm Steve Athanates. I'm the owner of NG Real Estate here in Ipswich. I'm joined today by Steve Beach from Stanford Financial. Steve, how are you?
I'm very well, thanks.
Mate, well, we're here for that very regular time. We're talking about the Reserve Bank of Australia and what happened with interest rates. Now, mate, I'm not even going to hold this up. What happened with interest rates?
So, as we both predicted,
yay!
Good and bad news. So they are still on hold or pause, as some people sort of like to call it. So, through the announcement, was quite expected by pretty much all economists. There was some data that came out only sort of in the last 2 weeks that sort of shocked, I guess, the inflation data that's come through. So, leading 2 weeks ago, there was a lot of talk of rate cuts still potentially with unemployment data coming through, but inflation actually spiked a lot higher than they were predicting. They were predicting inflation to come in for the quarter at 0.7, and it came in at 1%. So we saw, I guess, the two inflationary data that we talk about is 3.2%, and then trimmed inflation, which is basically what they measure, is at 3%. So it actually spiked 0.3%.
Right. Okay. So obviously clearly disappointing for anyone who was hoping for a rate cut. As we said, we predicted that's what it would stay on pause. Some of obviously the economic data didn't obviously go in our favour, and it was, I guess, largely unforeseen, I guess. So no one was really expecting it to happen in terms of, particularly, I guess, the increase in inflation. So obviously disappointing for anyone who was wanting a rate cut, but at the end of the day, it is what it is. Really, there's nothing we can do about it now. Mate, obviously, as always, the Reserve Bank, after the announcement, they talk about, I guess, the reasoning behind their decision. For the people at home, what do they need to know? What were the key points that was raised by the Reserve Bank Governor?
I guess a couple of the questions through question time was something that we were just talking about before was, we predicted rates were on hold. They announced rates were on hold. One of the questions was there conversations about, was there a potential opportunity for a rate cut? Was not discussed. And towards the end of the question time, was there even consideration for a rate rise? And said, no, it was not actually discussed. So it was a unanimous decision of pause, and they only ever spoke about holding rates throughout the meeting.
Yes.
A couple of the data that they probably spoke about was in regards to, as I mentioned before, unemployment has increased as well. Which is
normally that's what they're looking for.
One of the factors, I guess, it's almost like the tale of two cities. So we had inflation go up, which was bad, and then we had unemployment technically go up, which was bad. So we actually want it the other way around. We want keeping unemployment where it is, and we actually wanted to see inflation go down. A lot of their forecasts, which again are predictions, is about where we see inflation over 2026 and even into 2027 to get within that target band. So a lot of them were asking questions about where is the next movement. So a lot of them talked about pause for a little while, but even in the RBA's forecast, they're still predicting another rate cut next year. So
we just don't know when.
We don't know when, and it's the roll of the dice at any stage around these sort of figures. So that was a big one that came out.
All right. So whilst we have to curb our disappointment, the Reserve Bank doesn't meet again until 8th and 9th of December. Obviously, they'll be looking for further economic data as to what the economy is doing. Mate, I guess this is as good a time as any for us to make our prediction for that December rate decision. I'm firmly in. They're going to be on hold again.
Yeah, I second that motion. So definitely sort of on hold at this stage. I think they'll. Again, one of the other things that they spoke about was with probably not in the December actual meeting, but the next meeting in the early next year. Is the inflationary data that's going to come out through Christmas. Ultimately, we know Christmas time, everyone's on holidays, everyone spends a lot of money, there's parties, there's Christmas parties, and that sort
presents,
of thing.
All the presents. Yeah, the presents.
Too many presents. So ultimately, that's going to push up that inflationary data as well. So that's why most of the banks are now predicting, probably early to mid next year. So most of the banks and economists are all forecasting May is probably the next rate cut. So again, everyone's still talking rate cut. So no one's talking rate rise, which is a great news for mortgage holders and pretty much everybody out there. But something that's quite topical at the moment again is property prices, and we're just seeing them grow and grow and grow. Like one of the statistics that came out was we saw nationwide 1.1% increase on the property prices across Australia, and 1.8% just in Brisbane alone. So again, Southeast Queensland, we're seeing this growth and more and more. I overheard your podcast before. I'll steal a little bit of the thunder from that. Is buyers agents. We're hearing a lot from buyers agents in the finance sector as well. So it's a big thing.
Yeah, the buyers agents are definitely driving price in competition with first home buyers and obviously downsizers, and just people just buying and selling. But there is definitely increased competition. We've seen in the last 60 days. We believe that here in Ipswich, house prices have risen probably not by 1%. We're saying more like 5%. And in some cases, we've seen some extreme examples where we've just seen some huge sales, which would border even as far as 10% rise in the last 60 days. So as always, and this is a recurring theme, we keep saying to people, when should you buy real estate? You should buy it right now because we know what the price is today. We don't know what it's going to be 30, 60 or 90 days. But on the basis of all of the data, and you can't ignore the data, house prices are rising, and we believe they will continue to do so. So we've talked about in the past about how much money you could potentially have made either in terms of profit or even just in building equity if you had bought a house 2 years ago.
Imagine buying one 5 years ago.
Yeah. So look, honestly, if you've been holding off and you still keep holding out hope that house prices are going to drop, you need to let that go. That ship has sailed.
One of the biggest things that we're starting to see, because again we talk about the Australian government 5% deposit scheme. There are not all banks are on that, so there's only a select major banks and a lot of sort of smaller banks on it. But some of the digital banks are now coming out. So not a plug here, but UBank, which is a digital platform of National Australia Bank, just came out and said we're offering a 10% LMI waiver for all customers. So you only need a 10% deposit and they'll waive the LMI.
Wow.
So the first of its kind that's come out. So we're starting to see more and more banks opening up and going, hey, you may not fit within the Australian 5% deposit scheme because you're not a first home buyer. Now you still only need 10% to actually get into the property market without having to pay LMI. So
wow, that's an interesting development.
If we're talking about pushing property prices up even higher, you now need smaller deposits to even buy houses without having to, and these sort of things will increase people's borrowing capacity at the same rate.
Perfect. All right, well, look, that's the major news. To recap, at today's announcement, it's the 4th of November. Interest rates are on hold. We don't have our next meeting until 8th, 9th of December this year. Steve and I, we're both predicting at that meeting, unfortunately, interest rates will remain on hold. Now, to find out if that's true, of course, you're going to have to stay tuned to Ipswich's Real Estate Podcast, where you'll find out all the answers you need to know in terms of what's happening with interest rates and what's happening in our local, economy in terms of housing and affordability. So on that note, Steve, thank you for joining us. So Steve Beach from Stanford Financial, a great friend of our show, always welcome, an absolute source of knowledge. Now, for everyone at home, if you've enjoyed the content here today, you've enjoyed what we've talked about and found some insights, or if you've got some questions, we'd love to hear from you. Please click the link below. Just to finish off, I'm Steve Athanates. I'm the owner of NG Real Estate here in Ipswich. I look forward to seeing you on the next episode of Ipswich's Real Estate Podcast.